Welcome to the Quantum City Initiative, a show about the most important stories, ideas at the intersection of AI, cities, real estate, and the leaders shaping the future of how and where we live and work. Do you save and reinvigorate cities, or are you building new ones?
What is most critical for cities in the future with this sort of AI factory race to work? Okay, episode 30, the QCI show. Here we are. What a time to be alive. The birds are chirping. The flowers are blooming here in Boston. How you doing today, man?
We're close. It's still too cold, but apparently this weekend's going to be nice. We just got to push through.
We made it to 30 episodes. How's that make you feel? Energized?
And excited.
And excited. What I've learned over the last 30 episodes and really was actually this morning. So when we do the show notes, we got Justin helping us out, does an incredible job of the show notes. Then I've threatened Justin with an agent to try to automate him out of the business, but he does a phenomenal job. Then my agent also does a good job. And then so Justin and I, we share our show notes, right? You know, for the greater good, so we can prep, so we can do some good work. And then we just found out Chase this morning has his agent then take our work, produce a special script for him, and then he doesn't share it with us. Doesn't share it with class.
It's not a script.
Sorry, my bad. It's not a script.
Show
notes.
I freeform, my friend.
Show notes. Oh, listen, I've tried to script you in the past. We know it's just show notes, talking points.
Yeah.
All right, let's jump in. A lot of action this week. Yeah, maybe more action than we had last week. Completely hijacked the show. Went on the REIT report, talked about earnings, but we got a lot of action. The big one today, the anchor story. We actually have a lot of big ones. The anchor story today, we got a new Fed coming in. Kevin Warsh.
He made it.
He's here. We were joking a couple episodes ago about Mr. Powell refusing to leave. He's got a new boss now, but he is staying.
Yeah. Cue the Wolf of Wall Street meme. Not
Love
going anywhere. Yeah, I think that was just a little poke at Trump. Started the poking with the scrutiny of the office development. Now he's poking back. I'm looking forward to hopefully getting out of some of that and just getting back to business. But it was the closest vote in the modern era. It was a close one. I think Fetterman was the only Democrat crossover. There was one abstention, no vote, whatever. I forgot who that was. But I mean, the guy's pedigree, whether first off, he nailed the prediction for inflation. He was all over that. He thought post, I think it was all the way going back to the GFC and then into everything that we were doing with regards to COVID. He was like, government's getting too involved. Inflation's going to run hot. So he nailed that. He was previously a part of the Fed. I think he comes from, at one point he worked for Stan Druckenmiller's family office. So certainly pedigree is there. So I'm looking forward to seeing what he does. You do start to see, I think it was the Boston Fed chair talking about hikes because inflation's ticking up a little. So
yeah, it was a hot print. It was a hot print week. The conversation with Warsh and what he had to testify was that he was not going to be a President Trump puppet and simply just lower rates. So my question for you, hikes or sort of rate cuts, we certainly cannot predict the future. But what does a new Fed chair really mean for, let's talk about for commercial real estate, and what potential sort of implications, might we have with Warsh in the seat, or honestly, does it really matter because the data is still the same. The data is coming in. Do you expect some relief? Do you expect some maybe additional partnership with the commercial real estate side of the house? As we know, there's still a lot of debt that needs to be refinanced in the next 18 months.
I mean, the way for folks to think about it is the Fed funds rate, which obviously the Fed controls, is essentially the input for whenever you read about commercial real estate, you kind of hear about these maturities and you kind of have cohorts or walls of loan maturities, like what loans come up in 26, 27, 28, right? And the Fed's fund rate obviously is the input for what essentially will be the delinquency rate of those loans, which I think we crossed over 4% in Q1. I believe most of those are still very much kind of the antiquated bottom of the market. CMBS. So for everybody who's seen The Big Short, right, they took those consumer mortgages for their homes, bundled them all up, and then they syndicate, sell them, right? CMBS is the commercial version of that. So you have a bunch of commercial mortgages bundled into one financial product. I think that was at like 5.25. Maybe it's like 5.21 in terms of delinquencies within those products. So the stress is not going away. I do think this guy's coming in at a place, right? We had kind of been on the downtrend from an inflation perspective. Job market seems to be doing a little bit better, and inflation ticking up a little bit. So I don't think it's an obvious cut environment. But the general kind of read from a capital markets perspective, which MSCI has good data on this, is that the industry is seemingly getting access to capital where it's been pretty frozen up for the last couple of years. So everything still feels just a little bit stuck.
Yeah. So just going back to earnings real quick, Hudson Pacific reported their earnings. Their Q1 print was really strong, actually. And Hudson Pacific, they're predominantly on the West Coast. Okay. So we know the West Coast markets have been hit generally. On the Hudson Pacific Q1 earnings, they beat estimates. They raised full year guidance. I actually wrote a blog post, go check it out, and on LinkedIn about this. So the operating side of the business, leases were up, everything was up. And then there was a little footnote. They have a challenging and a bunch of loans set to mature pretty soon. And so that was the challenge that they marked in the earnings. And so at one point, or, on one side, you have the operating business doing incredibly well. On the other side, you have this looming potential debt maturity. That sums up exactly what you just said. Now, if they can still get the cost of capital that might be a little bit cheaper than where we've had it in the past, they're in a good spot. It's just, to your point, it's a tricky environment. Commercial real estate as a whole, according to all the numbers, are getting better. The market is getting better, but we still have the underlying cost of capital to deal with.
Yeah. And I think it's important for people to know the chair is still only one vote of the 12 members. They set the agenda, but they don't control the vote. So there's only so much this guy can do. And he's in for a 4-year term. So he's going to have to deal with whoever comes next after Trump as well. So he's a very serious guy. And I think for commercial real estate, it's now, we've operated at these levels of rates and Fed funds rates. So it was more the rate of change that happened in 22, 23 that threw people off. And if you haven't really digested that at this point, then you're probably in a little bit of trouble. But I think the market, for the most part, has digested it. AI seems to be doing, all the companies that are laying people off are also the ones hiring AI people and taking space. So I think a lot of the kind of excuses are gone.
Yeah, I like that. All right, well, let's keep going a little bit. We got a lot of news to talk about. I want to talk about Mr. Musk in a little bit. I want to continue on with President Trump, but I want to talk a little bit more about the experience gap real quick, because this is a little bit of a dovetail into what we were talking about with the Hudson Pacific, really in the real clear difference in the bifurcation of the market. Again, last week or 2 weeks ago, we talked about the REIT data, the headline that captures the entire story. Tenants signed leases on roughly 120 million square feet in Q1 of 2026. That's a 25% jump over 25, right? These are the first time in a decade quarterly leasing volume has cleared its pre-pandemic average. We are moving in the right direction. To your point, which you just made, AI firms, despite the doom and gloom, okay, about AI taking everybody's job, which is not there yet, AI firms are doing a lot of those leases. Cushman & Wakefield just put out the huge report that AI will add 330 million square feet to net new U.S. CRE demand over the next 10 years. Most of that will be industrial, wink, wink, data centers, but there'll be roughly 25 million in office. Now, that's just Cushman & Wakefield's report. The issue, though, here is B and C space. It's going the exact opposite direction. This is the old famous, the K curve that we have here. So in this challenging environment, Chase, what are you paying most attention to with regards to the quality of the commercial real estate market that we have. You have the trophy assets with the best experiences outperforming, and then you have a lot of square feet in a lot of cities, B and C, that just has absolutely no activity whatsoever.
Well, I mean, you kind of nailed it with the K curve, right? I do think the most interesting, I think it's very obvious at the edges, right? And frankly, like no one needs to talk about it anymore because it's obvious. Like whether you want to call it trophy or prime A, whatever, they're doing fine, doing well. The bottom of the barrel, whether you want to call it C, what have you, kind of screwed, kind of, right? They're screwed. I think there's this like class in the middle that if you can get access to capital and reposition, I think the thing the market we don't know yet is not everybody can afford the prime space unless you're really squeezing people into smaller spaces.
Mm-hmm.
So overall dollars might stay flat or tick up, but square footage goes down. But then there is the typical BB plus,
Mm-hmm.
which I don't think that's found its footing yet. And I don't know if anyone has a good answer on what side of the K that's going to land on. My bet is you're going to see over the next 2 to 3 years some enterprising people finding a unique position in market for what is reinvented Class B space.
And we've seen this before. This is the brick and beam. This was what was most attractive this is all the industrial space or the industrial look and feel space in Manhattan. I believe it's the meatpacking district. In Boston, it was sort of the leather district to start. Then it was Seaport. Now it's sort of downtown Crossing.
Yeah. So I think look, not everybody can be premium, right? And I do think there is a whole segment of the economy that will play there. The only alternative that I could see happening is you have a very massive group of companies that end up going into and what Class B might ultimately be replaced by as flex.
Yeah.
And that just might be what B becomes. So you don't get TI and customization, but overall quality is pretty good. You've got a bunch of bundled service. You've got flexibility. I would not be surprised if that's really what B turns into.
So is this like
you could essentially have 2 tiers of high quality space and then everything else flex?
Is this a WeWork opportunity here? Like when you mean flex, well, what are you talking about there? I have envisioned a Class B building, sort of head to toe, going flex. Is this a WeWork opportunity, or are you saying this is the landlord that would just sort of retro the asset solely for a flexible offering?
I think you're going to have a litany of different operators. I think it's going to be a good competitive market. I think for the type of company in that B, I don't know if there's necessary. You'll get some operating kind of benefits if you're in this business and big, like an Industrious with CBRE, particularly how they're positioned to provide it as a service to CBRE clients. You're going to have certain operators that come out with their own. Hines does a very good job of this. I think Tishman does a solid job of it, right? I think you're going to get a lot of these like, hey, we want to network across the nation, because I think the type of company is going to tend to be a bit more local, probably more flexible in terms of their office policies. And the like traveling salesperson use case, I don't think is going to be massive for them. So I could see local operators starting to split up their buildings more. Like that percent of the building footprint going towards flex, I think is interesting.
Do you think that'll impact sort of the capital markets and underwriting environment that we're in? Certainly if B and C has been struggling and maybe they've been sitting vacant, maybe the building's been half done. Do you think we'll see a lot more potential activity? You think we'll see a lot more capital markets activity? You think we'll see a lot more money go to work if what you just said sort of plays out and those buildings get that sort of shot in the arm that they need?
I think the capital markets might be the most behind on that. They seem stubborn about underwriting office the way they underwrite something like multi, or you've got shorter term. So I do think and I went on the Future of Work podcast and talked about this. I do think there's some need for education about our buddy Joe Pine's experience and transformational evolution that they're going to need
Specifically in underwriting, you're talking about
Yeah.
how those assets are. Okay, pull on that thread a little bit for us. I haven't. I'm sorry, I haven't listened to the podcast yet that you were on, because this is the only podcast that I listen to, so I can hear myself. Pull on that thread. Pull on that thread for me a bit on what you mean by the change in underwriting based on Joe Pine's experience gap, or what do you mean by that?
Yeah. So when folks look at an investment, say at a commercial office building, a lot of them are programmed to be looking at WALT, weighted average lease term, right? And in their what's called a sensitivity rating, WALT's an important variable. And I think there's just some evolution that needs to happen there, which is you need probably portions where you're heavily focused on WALT, where you're doing kind of the traditional leasing. And then when you're looking at another portion of the building or tenant segment, it's not going to be about WALT. It's going to be about renewal. You should be getting better margin. You trade term flexibility for higher rates and what should be higher margins. So I think that the modeling on how to underwrite those, and even thinking through like, okay, how does, say, a larger portion of my building being flex help with, say, the traditional business? There needs to be some different thinking from the capital providers on that.
How does that, outside of the two of us just talking about it and the many, many million, hundreds, tens of viewers that we have, how is that conversation going to continue to get louder?
I mean, look, I think I think it's very helpful that CBRE is kind of aggressively doing what they're doing with Industrious.
What are they doing with Industrious? Tell us.
Obviously, they bought it, and they're certainly not intending to keep it its current size. So I think they're skating towards where the puck is going. In terms of flex is less of a category and more of a capability, right? It's a solution type that you need in the tool belt for a building. So I think they're probably thinking of it the right way as their sandbox for innovation. And I think they're a leader for a reason. I think people will follow their lead.
I like that. The big green. The big green. All right, let's keep rolling. If we got time, we're going to get back and do a Rex analysis of Dubai, but I want to talk about some quick hits. A lot of news this week. My most favorite thing to talk about is to pontificate on the news. The first thing I saw this morning when I logged into Twitter or X was an incredible video that Elon Musk shared.
I didn't see it.
It's basically just like, it starts out super serious, and it's Tim Cook. It's all these individuals from China. It's on President Trump's meeting in Beijing, which is what we're going to talk about. So it's like this serious background with serious music, and then the music changed, and then it's just Elon making weird faces at people sitting down at dinner. And this is what he shared out about the meeting. So obviously that's actually the first thing we're going to talk about, but let's first sort of set the stage about this and about why it's important and what happened. And it was a funny sort of intro to this. My brother called me the other day and he said, "Hey, did you hear NVIDIA's hopping on Air Force One? The Silicon trade is back on." Sure enough, here we go. So earlier this week, Trump made the first sitting U.S. president state visit to China in nearly a decade. He brought along Apple's Tim Cook, Mr. Musk, obviously, NVIDIA's Jensen Huang on the plane with him. Big agenda. Obviously, it was about artificial intelligence. I'm sure there were others, AI warfare. I'm sure there was obviously a handful of other things from the little media that we know. It was certainly driven by artificial intelligence. Well, within hours of the meeting, Reuters reported that Washington had cleared NVIDIA H200 sales to roughly 10 major Chinese firms. Before we go into more about this meeting, why is that important, Jason? Well, let's talk about that from the AI race.
Yeah, I think a lot of people probably don't follow this unless you're like super geeky into the tech podcasts and things like that. But under the last administration, they were restricting essentially trade for our best technology chips to China. And on its face, I think the logic you can kind of reason through, which is, hey, we need the best technology for
Mhm.
ourselves, and we need to stay ahead in the AI race and all that stuff. I think a lot of people who have kind of seen this play out, there are certain theories where two nations that the more they trade, the less likely they are to enter into war. People have different opinions about that. I think one thing that's for sure is in technology markets, um, probably the more open you tend to be, the better off you're going to do. Technology is very much kind of an ecosystem business, right? Like you want the power of the crowd and people developing on your stack. No one has a monopoly on creativity. And for a while there, you can try to prevent them getting their hands on NVIDIA chips, but companies and organizations in Singapore were buying them, and then they're
Mhm.
making their way to China.
Shell
So
game.
I think Bill Gates famously said back in the day when China was stealing Microsoft tech, if they're going to steal anybody's, I want them to steal ours, or something along those lines. So I think this is a smarter strategic move to, do business with one another. Certainly helps NVIDIA stay strong. And I don't, from Jensen and that team, I think they're very pro America. So this isn't like an anti America move. I think it's smart. It's a huge market, right? And I actually understand the administration's beef with we don't really have free trade. They sell into our market. We don't get to sell much into theirs. So I think cracking open the market for consumption of our products is a very good thing, and it should help us continue to advance. If we own low in the stack, if you will, the chip layer, um, then I think we'll be positioned well. So I think Jensen said it was like one of the most important summits in human history or something like that.
Did talk in his
I
own
think
book,
he might
but
be
I don't.
right, by the way. I'm
Yeah,
not,
yeah.
um, but this is a very big deal.
And to me, this is the beginning. Probably an obvious thing to state, but my guess is just the headline that we're hearing about the ability for H200s to be sold into Chinese firms doesn't even scratch the surface of the conversations that were probably had with Apple and Tesla, SpaceX, whatever Elon is working on at the moment. There's probably a lot more here, and this is exciting. This is exciting. I mean, competition creates greatness. And I think this is important, not just for NVIDIA stock price, which was up on the news, down today based on inflation, but up on the news.
Yeah.
Speaking of ups and downs, let's keep going. This was fantastic. Oh my God, what a transition, Greg. God, you're so good at this. Spirit Airlines. Unfortunately, my man, it's gone. Liquidation is approved. However, there's a crowdfunding campaign to revive it. Just give the people what they want. So, nobody ever wanted to fly Spirit Airlines. In fact, the government blocked acquisitions of Spirit Airlines. We could sort of talk about that. But now there's a crowdfunding campaign for people to bring it back, to bring back that low cost airline. What's your take on this, man?
Well, our esteemed senator here in Massachusetts, Elizabeth Warren, kind of led the charge on, you remember JetBlue tried to buy Spirit back in
Yeah,
the day.
sure do.
I believe her position was that it would lead to job cuts and a less competitive market. And
Sure.
now I think it's probably a worse situation. Obviously, at Spirit no longer has their jobs, and I think the big guys, Delta, et cetera, are
Just
probably
raising prices.
yeah, they're just going to be bigger. So I would like to see M&A get opened up again, particularly with everything that's happening in AI. Like everyone who thinks they have an incredible defensible position is facing new forms of competition like they haven't seen before. So I think the government should probably get out of blocking these things, because I'm sure the people who sat in those meetings genuinely did believe what they were saying. I don't think a lot of these people have worked in the private markets, but it had the consequence of which they were claiming to try to prevent. So not great, not great.
Happened anyways. You know what I'm super interested on, and I don't know much about is which I got to do a deep dive. Claude and I will maybe do this later. Is the commercial real estate specifically adjacent to airports? Generally, a bunch of random weird restaurants. Generally, a bunch of odd hotels. Um, I believe my understanding is they all do incredibly well. I don't ever try to stay anywhere near them, except for when flights have got canceled. You and I stayed at that wonderful place out by O'Hare a couple of years ago. Is
Well,
this just an untapped resource here? I don't know
I
much
have
about it.
tried to never go back to O'Hare. That place is the worst.
There's got to be something here. And I guess what was making me think of this is what happens when an airline goes out of business. What happens to the gates? What happens to the real estate adjacent to, I guess, all these jobs or whatever? But I guess
Yeah, you're
people
right.
just hop on a different boat.
Yeah, there's broader ramifications because those airlines leased and portions of the terminals from the airports. So now the other airlines need to step in and fill those lease spaces. So, and Spirit was, I mean, particularly if you're fighting for the common man, nuking Spirit Airline.
Yes, they fought for the common man, but every time the common man tried to get on an airline, it just had their hand out. Like, Mr. Gomer, it's an extra $3 to take this route instead of that route. Mr. Gomer.
Are you complaining about Spirit now?
No, I'm not. I don't know. I guess where I'm going is I'm about to contradict myself.
You didn't
in a
need to
headline.
buy those things from them.
Oh,
You did not need to buy the water or whatever it was.
Sure, right. I'll just dehydrate myself.
Dude, BYO water, man.
I guess I don't honestly do that. I know you do. I don't
Yeah.
honestly do that because the few times that I do, I forget about it. And then I get through security and then they look at me, they're like, yep, that's
Sounds like
right.
a real-
I do have a massive water bottle completely full of water. You're right.
Sounds like a real you problem.
It is a me problem. Now it's everybody else's problem for having to listen to me about it. So where I was going on the contradiction. So headlines are out constantly every single week. The most recent one, I don't know, fill in any tech company, right? Cisco cuts nearly 4,000 jobs. Okay. All tied to AI. We saw Coinbase. We saw whatever, any number of companies. Meta's certainly done it recently. I'm trying to think of the other headline names that are out there. But anyways, stocks go up and down. They pop on the news. However, earlier in the show and last week, we just talked about how artificial intelligence can benefit commercial real estate, how artificial intelligence companies are making up a significant part of the Manhattan leasing or had made a significant part of the Manhattan leasing Q1 numbers. So, Chase, how is it that, I don't know, we got two sides of the story here. We have X company, Cisco or whatever it is, cutting jobs tied to AI. And then we have all this AI growth and jobs. What do I make of seeing both headlines here?
Well, we always talk about technology oftentimes changes work rather than gets rid of work.
Okay.
I think that's an element of this, right? Where, I mean, we see it in our own business and we're small compared to these guys, but we're seeing like there's some people who they grok it, right? Like they get how you can get leverage from these tools. It requires a little bit of a different kind of thinking. You know, I always compare it to the textile machines back in the day of the Luddites. Like you have some people who are like, nah, like I take my craftsmanship of sewing really seriously. And you get other people that are like, oh, cool, I can use this machine to sew, weave, whatever at a way greater throughput. I think the people that want to stick to being sewing with their own needle in hand are probably going to continue to find themselves on the wrong side of that line, which is where we've talked about this a lot. I think the most important thing, and you can only do so much, but like reskilling and retraining people is going to be critical for this. But there's going to be a ton of demand, right? And we're seeing this in the hiring of recent college grads, people who it was just like when you and I were coming out, quote unquote, digital natives, people that I guess just got the internet and social media,
right?
They were in high demand. People that just kind of get how you can leverage these AI tools, and young people will have a benefit of, I think, growing up around it. They're going to be in high demand, and you're going to be able to produce more of things at better prices. So I think you're going to continue to, just like we're seeing in the commercial real estate market, I think you're going to get a labor market K curve.
Okay, that's interesting. Speaking of that, let's keep moving on the labor market K curve, because this is somewhat of a, not a main topic, but one of the sort of, and this is for the geekier sort of side of the show, forward deployed engineers are one of the hottest jobs out there. The reason I believe this is coming about, maybe you agree, maybe you disagree, is that obviously a lot of companies have deployed a lot of capital towards AI, whatever that is. Some companies invest in the power, some companies invest in the infrastructure, some companies just invest in tools for their employees to use, right? What we're seeing now is that the ROI is not necessarily there yet at the enterprise level. So let's talk about this. OpenAI just launched a new company, OpenAI deployment company. We know Anthropic has exploded in enterprise all around the notion of these forward deployed engineers. Where's the enterprise thinking about AI, Chase? And you were talking about these digital natives, these AI native individuals. How is enterprise thinking about all of these tools and specifically FDEs?
Well, I think the FDE craze is indicative of a few things, which is it's enterprise implementation and change management, which I don't think is really a new concept. Um, but I think a lot of these groups, that the speed at which this stuff is coming, their big hurdle for market adoption
Mhm.
is the internal skill sets of people can't keep up with how fast they're moving. So that you remember that old SNL skit, Nick Burns, the company computer guy. I think Jimmy Fallon was Nick Burns,
No, I
where
don't think so.
it's a great skit. But somebody's like, "Oh, I have a problem with my computer." He's like, "Move," and he moves away from the computer, fixes it, and is like, "God, I can't believe you couldn't figure that out." It's kind of like the Nick Burns of AI,
Hmm.
where they're like, "We don't have time for us to hope that you guys get up the learning curve on this." So I think they're going in, they're dragging IT teams into the future and trying to. I don't know how much actual change management training in these things is going on. We'll see in a year or two. It'll directly correlate to spend. Can you teach people to fish rather than having to fish for them? So I think that's
For somebody who's we've played in commercial real estate, we've worked in commercial real estate, we've worked in, SaaS, IT, tech, whatever it may be, FDEs. When I hear change management, it's long, it's painful, specifically in commercial real estate. How do you think this impacts CRE? Knowing that, we sort of play in the tech side of the CRE landscape.
I think it's one of the certainly the hardest to change, and because they kind of miss the cloud in a lot of ways, I actually think they're decently well positioned.
In the artificial intelligence, is that what you're talking about? Using well
Yeah,
positioned in AI? Yeah.
yeah. Like a lot of cloud and SaaS infrastructure is debt that you got to kind of find your way out of.
Because they miss that, they don't have the debt. Is that your point?
Yeah, yeah. I mean, they like,
Hadn't thought of that.
yeah.
Look at all this debt we have. Well, us in
Well,
commercial real estate, we
think about
just failed to adopt, so we don't have any debt.
totally. Think about the pain of moving a CRM system. Most of these guys don't have CRMs. It's crazy.
Right. They
So I
test
guess
that.
they don't have to do that. So
Huh.
they can be. You see these AI native companies that they don't have to change from what they did to what they're doing. They're just starting with a blank slate. Now, commercial real estate certainly quite that, but in certain areas, they just don't have stuff, right? Like they don't do a super thorough job on having certain systems of record for the complexity of their buildings and all this other stuff. So, in that sense,
Hmm.
glass half full, silver lining, my man.
Wow. Love it. We're so far behind. We're ahead.
Yeah, kind of.
Love all of our
It
customers.
was all
I
by
mean,
design.
I mean that. You guys are smarter than the average executive out there. Okay, let's keep moving. Blackstone, the same day Warsh was confirmed earlier this week. Blackstone Digital Infrastructure Trust is a $1.75 billion data center focused IPO. Pretty exciting. The mandate here: acquire newly constructed income generating stabilized data center properties leased to investment grade hyperscalers, all the big names: Microsoft, Google, Amazon, Meta, on 10 to 20-year contracts with 2 to 3% annual escalators. So to me, just reading this, what it sounds like, we can't offer any advice. Seems like this is a decent bet. by Blackstone, pouring money into this. Seems like this is a coupon generator. However, like we've been talking about, a lot of people have issues, a lot of NIMBYism with data centers. What's your take on this?
Well, I think they highlighted, I think it was what they identified 25 billion of near-term purchase opportunities in Northern Virginia, Ohio, Phoenix, Maryland, and Austin. I think they've identified the areas where
they can get the work done.
Yeah, it's going to work. And they're apparently buying stabilized assets. So I think they've been investing in kind of the development. And now what they're seeing is later in the life cycle, it's probably right for a different investor profile, which is probably why they're going with the public entity on this. But if BX is long on these stabilized assets, then that's usually a pretty good sign. And I don't think we're seeing, a lot of people think there's going to be this slowdown. A lot of people have predicted the slowdown. I think the overall macro trend on data centers is going to continue to keep up. I do think the innovation and creativity of the private markets, like if you're going to get blocked in certain areas, they'll find, whether we've talked about this, whether it's underwater, in space, or in business friendly jurisdictions, they're going to find a way to do it. Like the world needs it. So the market tends to find a way.
Do you see some of the new, they were talking about putting data centers in people's houses and people's walls? It's kind of what you were talking. Did we talk about
with a big home builder?
Yeah. Did we talk about this on the show, or is this just us riffing? You were talking about trying to incentivize.
Yeah. This ties into, so they're basically taking a lot of homes have a surplus with regards to when you think about electricity in the grid, like there's surplus. So you can now just smack a mini little NVIDIA setup on the back of your home and make money off of it when you've got surplus energy, electricity. I think it's brilliant, right? It's how do you involve the broader population in what's going to be massive wealth creation with these data centers. So love the move.
I feel like the way I'm picturing this is like what folks used to do back in the day, which is like put those Bitcoin mining computers in their closets.
Yeah, I don't know if they made money on those, but yes, kind of. Except it's just apparently a metal box crate thing on the side of your house.
Not against it. I'm in. Dude, if somebody wants to pay to put a data center in my backyard, literally in my backyard, I'm sure my neighbors would be thrilled. They weren't thrilled when I put a fence up, so can't imagine they're gonna be thrilled when I put a data center in.
They'll love it.
I'm in. Let's go. Our AI is going to be faster in my neighborhood. Okay. Let's do a quantum review. Let's talk about Dubai. We got a few minutes. We got about 10 minutes. We'll talk about Dubai for about 10 minutes, and then we'll get out of here. Although we got one more bit of news, and it's pretty good. Although the broader theme of one more bit of news is what I want to talk about, because we can't necessarily talk about one more bit of news because it's incredibly and hilariously inappropriate. But the theme is good. Okay, let's talk about Dubai. So we've had some guests on from the Emirates. We've talked about Dubai. Dubai sort of has been leading the charge in really all elements of your 5 QCI pillars, Chase, that you penned earlier last year. What it is that they're doing well, and sort of how can we learn about it? I think the last city we talked about, unfortunately, Mayor Wu has not responded to our invitation, although the only invite I have on record is us just asking her on the show. We've yet to formally send an email, but that's coming to come on. We talked about Boston and sort of where it stood up, and unfortunately the scores weren't great. But let's talk about Dubai for a bit. Dubai is an absolute leader when it comes down to our 5 QCI pillars, right? Maybe it's because of the capital, but capital really doesn't solve all the problems. A lot of infrastructure upgrades, a lot of little focus and execution that needs to be there. So the mobility stack. So this is new. What's launching in 2026 in Dubai as it regards to QCI? The Metro Blue Line. It's a $5.6 billion 14-station tunneling launched in May. The Metro Gold Line, 18 underground stations. The Etihad Rail Passenger Network, the Dubai Loop, which is the Boring Company. Construction's beginning. Air taxis. So when you think about transportation, we talked about the infrastructure. So you have all this new rail, you have the Boring Company, you have tunnels, you have air taxis. Oh, now you have driverless taxis, 100 driverless taxis launched. You have the trackless trams. You have basically this completely rebuilt transportation network all around this 20-minute city frame. Why is that so important? It feels like there's a massive amount of money just on one element here with regard to a quantum city and a leader in a quantum city just around transportation.
Well, I mean, any way you can save people time. I mean, it's throughput of the system, right? There's no better measurement of throughput of can a human, you think about cities produce human interaction. Can a human get from point A to point B more efficiently? So, better throughput of necessary human interactions. And I mean, these guys are doing it on every front. The name is, I don't know if it's Joby or Jobby, but these air taxis, like it's apparently launching at the end of 2026. I think they have like a 6-year exclusivity on the deal or something like that. But Peter Thiel always said we were promised the Jetsons and flying cars, and we got more social media apps. Well, not in Dubai. The Between the loop that they're doing with Elon's Boring Company, the metros, the flying taxis, they already have really good new infrastructure from a building perspective and the roads and all that. Now they're adding in the public transit. I think probably their biggest headwind is obviously the stuff with Iran in the Middle East, but otherwise they also have very good credibility. They've built really good stuff on the building side. I think Saudi is a little bit new to the game in terms of what you're seeing with the line and Neom and all that stuff. These guys have delivered. You just go look at those time lapses of what was empty desert, and now it's a shining metropolis in the desert. So if other countries don't wake up and start competing on these vectors, like it's always unpredictable who the next superpowers are.
So their stated goal, and I want to double down on this because I don't understand why this is not a stated goal in other cities, in other major metros, in other countries. Their stated goal is 80% of daily destinations reachable within 20 minutes by sustainable transport.
Quantifiable outcome. Love it.
If that's true, if that pans out, what kind of massive impact is that for the actual city, commercial real estate, the vibrancy, the economy? It has to be unmeasurable at the moment to think what 80% within 20 minutes.
Yeah, they're going to be able to directly connect that statistic to GDP output. So
why aren't we doing that in the United States? Boston, forget Boston, New York. Okay, New York's a grid system. Last time I was in New York, it took me 20 minutes to walk, I don't know, 8 blocks because it was quicker to walk than it was to hop on the disgusting transit or take an Uber, whether somebody was driving me or not in the Uber. It was driverless or not. Can't afford a helicopter yet around Manhattan, maybe someday, which is just a fancy rebranding or the rebranding of air taxes or whatever they're called. Why aren't other major cities in the States sort of focused on this transit and this transportation angle? It seems like, to your point, it could have a massive impact to GDP where all we're kind of focusing on is really just complaining. I don't know.
It's like a societal apathy. You see this all the time. Like the big affluent powers start focusing on the wrong issues. I didn't listen to the whole thing. I think Chamath talked about that on Joe Rogan when he went on like a month ago or so. Like we focus on the wrong issues, right? And you've seen this time and time again throughout history, right? Like look at the things that we're arguing about, and you have these new up and coming players who are focused on, say, the right inputs to driving GDP growth. And GDP, like we're rightfully, I do think our system doesn't benefit enough people. But if you want to solve that, there's probably too much focus on social issues. There's too much focus on these other things that I think he highlighted well in the interview. But like it's a will and skill kind of thing. I think we would have the skill if we wanted to, but it's a will issue, right? Like,
and when you're talking about will, because to me, like, okay, the focus of the transportation side, I think, is inherently overlooked. So maybe they're not sort of giving it the will power that it needs. But what Dubai and Singapore and a handful of the other real fast movers and leaders here, as we measure Quantum City, they allow that will to happen by removing the red tape. and it accelerates the entire process. So it's not just a like 30-year stated goal. It's something that could actually be done in some that could have an impact on them.
Yeah. And we just elect the wrong people because we care about the wrong things.
Oh, interesting. Okay. Well, I guess we'll end on that. Super dark, man. Let's talk about, let's bring it right back up. Let's talk about one more bit of news. So I haven't watched the whole thing, but I want to just talk about comedians for a bit. So the roast of Kevin Hart, have you seen it yet? Did you watch it?
No.
Maybe I'll watch it tonight.
Is it like recent?
Today's Friday. Just happened last weekend.
Oh, really?
Tom Brady's on it.
First time they've done it?
What?
Is this the first time they've roasted?
No, roasts are back. This is the roast of Kevin Hart, but Kevin Hart has been on other roasts. Tom Brady's back on this one. Shane Gillis is hosting this one with Jeff Ross. The Rock's on it. There's a significant amount of people, so on and so on. It's my understanding it's incredibly inappropriate, depending on your definition of inappropriate or not. But I want to talk about just comedians for a second. So the roast of Kevin Hart is back. Tom Brady got famously $25 million for his roast. We know that the entertainment industry as a whole, actors and actresses are going through somewhat of a challenging time despite making all the money that they do. Yet comedians, maybe it's the anti-cancel culture that we're in now. It feels like comedians are the biggest celebrities on the absolute planet right now. I haven't done my research on how much money Kevin Hart got for this or what the production value of this is, but it feels like every time I go into Netflix, there is a new special. Comedians are selling out. Shane Gillis just set a massive record in Boston for highest attended stadium series of a comedian. Are they not the biggest celebrities on the planet right now?
I mean, they kind of cracked open the free speech issue, right? Like Dave Chappelle, I think cracked it open, and we're now through a wave of, it's probably going the other way to like shock culture.
There's an element of that.
But I tend to err on the side of free speech. And it was I think the comedians who pulled us out of the hall monitor culture we were getting into a few years back. But it's built for social media because you get these like little quips, right? Like these short little clips that do well on social media. So I had not seen this roast of, is it out yet?
It's out.
All right. Well, I might have to watch it. Seems to be controversial though.
Of course. They're really pushing the boundaries. I think what I love about this trend or this moment in time that we're in, where comedians are the biggest celebrities on the planet, is at the end of the day, maybe some of them have an agenda, sure, but let's get past that for a minute. At the end of the day, what they're trying to do is make people laugh a little bit more.
Mm-hmm.
And you know what? If we all there's a lot of stuff going on in the world. Everybody's focused. Everybody's busy. I love that. Hard work, grind. Love every second of that. But a couple extra laughs in the day, man, just makes you feel great. I'm all about it.
I'm with you.
All right. Well, listen, episode 30, huge milestone. Third of the way to syndication. I don't know if that works in podcasts that aren't significantly watched. But, at some point we'll get those residual checks coming in. Stay tuned for more. We just got an invite to go on the road. We got some more guests coming on and some more exciting things coming up this summer. You might even see a change of background. There's even a potential that we do it in the same room. And we incorporate some more elements to the show. You guys have been great. Subscribe, like, share. Appreciate every single one of you. Keep the feedback coming. Thanks for coming out.
Till next time.